Globally, we have seen such massive appreciation in real estate prices. Most major cities around the world have watched houses go from expensive to completely unaffordable. Now people are drowning in debt and there is no way for them to resurface. The public thinks it's great because they'll have endless roaring 20s prosperity. That's probably not too wise though. Oh well, you came here for the truth, so let me unveil that for you. Today we're going to look at real estate from the United States to the UK to Canada and so much more. So let's begin by taking a look at this. Manhattan real estate sales fall for the 6th straight quarter, longest losing streak in 30 years. Manhattan's real estate had its worst quarter since the financial crisis. Total sales fell 3% in the first quarter, and that's the 6th straight quarter of declines. I'm going to show you a whole bunch of charts for all of the data I'm about to mention to you. Manhattan's would-be homebuyers are in no rush to make deals, while the number of condos and co-ops on the market continues to rise. Purchases dropped for a 6th straight quarter in the first 3 months of 2019 as sellers struggled to cut prices deeply enough to attract offers. You may have seen this in your areas as well, where there's a home down the street. It's had that for sale sign there for weeks and weeks. They've been cutting the price. Maybe they pull it off the market. They put it back on the market at a lower price and it doesn't sell. And what do? Well, you can pull it off the market and wait for a period of time, or you have to drastically cut that price. But most people don't want to do that, of course, because they thought, well, this is what I thought it was worth and I'm going to hang on for a little bit, but the prices keep falling. I see the same thing in the area near me in Toronto, where the prices are in some cases $200,000 lower than where they were at the peak. That's a pretty significant drop when you see a 20% difference from the peak that we experienced in 2017. Things have really changed. Yes, the homes are still expensive. Let's not deny that. When you look around London, Manhattan, San Francisco, Toronto, Vancouver, Sydney, and so on, all of these places, even though we may have seen prices drop in some areas, it's still extremely high. But that doesn't mean that they're going to remain high for a long period of time. If we have interest rates rising, this is going to be a problem. We have seen the central banks becoming very, very dovish, as they like to call it, and that has brought in lower mortgage rates as a result. But we'll see if that can be sustained, because this is always a cycle, and of course that is going to be a problem for people who get themselves in at a price that's too high for them, but they feel obligated simply because this is an opportunity for them. Piling up, the number of homes on the market rose for a 6th straight quarter. When you see the amount of inventory growing and growing, this is not a good thing, obviously, because it gives buyers more options. When you have that, generally, you're going to see prices that the sellers didn't want to go at. They are willing to take it because they didn't get 17 offers like they were getting a few years ago. They only had 1 or 2, so they take what they can get. This is happening, I know, specifically in Toronto, where homes are just being pulled off the market and they are not even showing up in the inventory. What they're doing with those homes, I'm not too sure, but this is what has been occurring without a doubt. Slowing sales. Manhattan home buyers made the fewest first quarter purchases in a decade. So this is one city that we need to watch because the prices had come up so drastically. They're still very high. However, it's one of those cities that gives us a real good insight as to what's happening around the nation, but as well as other major cities in the world. No, it doesn't mean that what happens in Manhattan specifically will happen in all of the cities in the United States, but it gives us some insight as to what we're looking at, because where they go up very high, they usually come down very hard. So that's where we got to pay attention. Price drop. You can see out of CNBC, just showing you here the differences between 2018 and 2019. And obviously the blue is 2018, the orange is 2019. And the higher you go, obviously, the more significant the price drop. If you look at the 4+ bedrooms, that has come down, in fact, more than $1 million. So the drop is very big when you see it's just 1 year, and yet we are witnessing percentage-wise, it's actually quite a big drop there. So that's just for you to look at, and you can see the market share. This is the breakdown of Manhattan's real estate, whether we're looking at the studios, 1 bedrooms, 2 bedrooms, and so on. Now look at the prices that you see on average in Manhattan and understand the vast majority of them are 1 bedroom units. So the prices are absolutely astronomical even now after they have come down significantly. I don't think that this is sustainable at all. Based on what the people get paid in Manhattan on average, and you look at the average home, there's no way that this can be maintained for a long period of time. I do believe that Manhattan will be above the national average. That's for sure. It's not going to decline and everything else is going to somehow stay where it is, but in percentage terms, we could see a huge drop. Looking into London, obviously there's chaos going on over the last few years, particularly right now in the last few weeks, because of everything that has happened with Brexit. And the real estate prices have suffered, and this is one reason for that. You have a lot of problems going on here politically, and that is, of course, concerning people, concerning investors. They were waiting, in the beginning, they just wanted to see, let's wait this whole Brexit thing out. Once it's done, we will then invest. That's businesses, that's for real estate, that goes for anything. But it's been dragging on, and there is even the potential that there will be no Brexit anymore. This is something that I talked about years ago when they started to talk about it in the beginning, before Article 50, before all that talk, and it seemed very unlikely that they would ever be able to leave. But here we are today, years later, still ongoing. Nationwide building society named London the UK's worst performing region in the first quarter of 2019. Mortgage approvals are down, asking prices are low. Look at this data I'm going to show you here, and I have some charts as well. London continued the lead for the UK's weakening property market at the start of 2019, with values falling the most since the financial crisis a decade ago. Apparently, the property values in London dropped 3.8% year on year in the first quarter. That's a 7th straight decline, and leaves London as the worst performing region in the UK. In here, they're talking about Brexit. They're also talking about consumer confidence being very low. Here's the chart that corresponds to that. Highs and lows. London house prices are falling at the fastest pace in a decade. You can see that it peaked out somewhere in 2014 and has been falling ever since. This has been going down year over year, and people need to pay attention because London is one of those places that is very important globally, and yet we can still see prices falling. Optimism waning. UK businesses reported the weakest sentiment in 7 years. So that has fallen as well. Again, around 2014, that's where the peak was. It has fallen ever since. Now, Ireland, I have heard so much from my friends in Ireland asking me, please do a video on Ireland. I want to know what's happening. Well, I have an article for you. Ireland property rush risks repeat of a crisis. Now, if you want to read this article, it's long, it's detailed, but it gets into what's happening right now in Ireland. There's just no way I could possibly get into all the details in here because it gives you the history of what happened in the previous cycle. Basically, a lot of hot money flowing in, and then people paid the price for that. Now today, there's a lot of risks that are apparent, but it's not nearly as bad as it was back then. I just wanted to stress that. One of the major benefits of Ireland is the taxes. If you're opening a business, this is one place that people in Europe often look to. So I'm just going to mention that, throw that in a little tidbit there. But now I want to switch over to Canada. You're looking at the Bank of Canada's governor, Stephen Poloz, says that the economy needs a longer lift from stimulative interest rates to overcome domestic and global economic hurdles, though he predicts the country's recent economic weakness will only be temporary. So what they're talking about here is the potential that they will actually decrease interest rates. It wouldn't surprise me, especially if this continues to drag on with the economic sentiment being very low, consumers not doing good, real estate is suffering here, and so we could actually see this coming. If that's the case, you would see mortgage rates declining. In fact, they already have somewhat declined from their peak, and this is not just the case in the United States, but also present in Canada. It wouldn't be a shock to me at all to see real estate prices getting a little boost temporarily because of this interest rate decline. People in Canada are absurd when it comes to debt. It is a fashion statement. It is an honor to have a massive mortgage. The bigger the better. This is the level of debt in Canada I'm talking about. Check this out. The 2019 federal budget includes a tantalizing pitch for prospective first-time homebuyers, one that could see Canada's housing agency contribute up to 10% of the purchase price of a home and bring down the mortgage load for borrowers. Think about this for a second, okay? What I just said. The government's going to come in and bail you out, okay? That's what it breaks down into. The budget offers the program known as the First-Time Home Buyer Incentive as a way to help with housing affordability. The government is earmarking $1.25 billion over the 3 years for this. Functionally, it's more like an almost interest-free loan, one where the repayment plan doesn't require any payback until years in the future. But have no fear, you have to come up with at least 5% down. I hear this all the time. People keep saying, well, you have to put 20% down, you have to put 25% down. Why are you lying? It's not true. What are you talking about? 5% is becoming the norm. Yes, you have to get the whole insurance on that. You got to pay an extra fee, but there's a whole bunch of people doing that. Think about it. If your home costs $1 million, what are you going to do? If even the home is $500,000, most people do not have that down payment, so they have to get into programs like this, which only fuel the bubble further. But you don't have to worry because Bank of America is going to be there to help you out. Bank of America said it will help low and moderate income people in the US become homeowners by extending $5 billion in mortgages. The 5-year program called Neighborhood Solutions also includes grants for down payments and closing costs and mortgage packages with small down payments. So they're going to help people out, quote unquote, help them out by getting them far into debt even when they shouldn't be purchasing a home in the first place. Congratulations, this is going to end in doom. There's no other way to put it. When you have this much debt, you're carrying it. Doesn't matter if you're carrying it at a low interest rate or not, people can't afford it. How do you expect this to ever end positively? I really don't know. I'm not going to sugarcoat it. I just want to say thank you to all of those who replied to me on the post that I made, and I'm just really thankful for all of you. That's all I'm gonna say. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. If you want the financial education you are not taught in school, these 2 books have everything you need, top to bottom. They got it all. Check it out at the link. If you want the audiobook, that's available at themoneygps.com. It seems that many people are leaving California today. If you haven't seen the video, definitely check it out, and I will see you there.